the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Business Standard Banking Show. I'm Ishan Gera. In this week's episode, we will discuss the important developments with a cover story highlighting the functioning of digital rupee and whether it can be truly anonymous. We have an interview lined up with Murali Natarajan, MD and CEO of DCB Bank, where he talks about the bank's future strategy. In a Banking for You section, experts explain how to operate a digital rupee wallet. And our banking expert Tamal Bandyopadhyay sheds light on RBI's rate decision. At the end of the episode, we shall discuss the results of the last week's poll and ask you the question for the next week. It has been an eventful week. With another rate hike, the repo rate in the country crossed the 6% mark. At the start of the year, the repo rate was 4%. Another game-changing announcement over the week was the conditional approval to global private equity investors Carlyle and Advent to buy a stake in Yes Bank. But the highlight was the launch of the digital rupee pilot. In our cover story this week, we deep dive into the central bank digital currency's functioning and questions over its anonymity. Last week, India became the 26th country in the world to launch a central bank digital currency or a CBDC pilot. Worldwide, 112 countries have shown interest in a CBDC. 2 countries have shut their projects, whereas 2/3 are in the research and development phase. India is among the handful of countries that have started a pilot and are on the way to launching a digital legal tender. On the first day, tokens worth 1.71 crore rupees were created. Although minuscule compared to the currency in circulation, the pilot paves the way for more extensive implementation for everyday use. But what necessitated a digital rupee? Unlike most other countries, India developed a full-scale payment system called the Unified Payments Interface or UPI, which is growing in market share. So how would a digital rupee change the game, and how would it be different from what exists today? There are certain advantages to a central bank digital currency which the current framework cannot address. A CBDC is based on a distributed ledger technology which makes it safer than the current system. Does that mean no more hacking? Not really. Hackers can steal money from your account, but they cannot bring down the whole system because each transaction constitutes a separate block. Moreover, at a time when Bitcoin and other digital systems were gaining strength, a CBDC puts RBI in the game with others. Even RBI Deputy Governor T. Ravishankar highlighted this at a recent event. For trade, CBDC has advantages as it brings down the cost of money transfers and promotes trade in local currency. But what can be the advantages for the consumers and banks? A CBDC works on a centralized system controlled by RBI with banks issuing wallets. Currently, 4 banks, State Bank of India, ICICI Bank, Yes Bank, and IDFC First Bank are issuing wallets to select customers in 4 cities, and the network will soon expand to 8 banks and 13 cities. Once they have the wallet, they can transfer money from their savings account to the wallet and send the money to users with other wallets. Ultimately, customers won't need a bank account to operate a wallet. The central bank would bear the entire cost. They can also transfer it back to the savings account to earn interest on it. But these advantages merely change the medium of exchange. What matters is the anonymity that CBDC promises. Unlike UPI, cash offers people the anonymity they desire. They can go to an ATM and withdraw cash. All the system knows is that they withdrew cash. It does not know how you utilize it, which is what the digital rupee promises. Let's go to our banking editor, Manojit Saha, to understand.
When a bank transfers a digital cash to a CBDT wallet, that transaction is recorded in the CBS as it is similar to when a person withdraws money from the bank. When the transaction is made from one CBDT wallet to another, this leg of the transaction is not recorded in the bank's core banking solution and will remain anonymous. But even between the wallets, there are digital trails of transactions. RBI is working to put in a mechanism to erase this digital trail also. The aim is to mimic or replicate the characteristic of a physical cash in digital currency, including anonymity.
But this still leaves a lot many questions unanswered. Any token leaves a paper trail, so how will RBI erase all transactions, and will it keep any in case of suspicious accounts? We talked to Naveen Surya of the Payments Council of India to understand.
A real anonymity like a physical currency would be extremely difficult in a product like CBDC. So we have to understand that in a retail side, definitely there will be transactions once the, let's say, e-rupee is issued to the end customer. And if that end customer is using between different customers, that leg may not have actual details or let's say full details of who are doing these transactions, which happens in physical cash also. But let's understand, because it is digital, you'll always have a footprint. Anonymity is not the best case or a use case for e-currency, right? For that, you have a physical currency in any case. So somewhere I think we're expecting a particular feature of currency to be delivered in a digital platform, which is probably not possible. I don't think purging data is the right solution, because when you do something on a DLT or a blockchain, you're supposed to maintain the record, right? Maybe you will not link it to identity, but you will have some trail definitely. So I would say it's difficult to have 100% anonymity. You could have at the last leg some bit of anonymity.
Can digital rupee replace cash altogether, or are we just looking at another UPI replacement? Or will the initiative just remain a commercial success? Surya says physical cash will play a different role. Tech-savvy people will adopt digital, but they are not in the competition with each other. He also highlights that chances of its retail success are 100%. Digital rupee is a perfect balance of both worlds. How well that balance is retained depends on how easy it is to access the digital rupee. A discussion on success usually veers towards the performance of private sector banks. They have been outperforming their public sector peers over the last 2 quarters as profits for the industry have zoomed. Business Standard's Raghu Mohan spoke with Murali Natarajan, MD and CEO of DCB Bank, on the credit quality post-COVID pandemic and the bank's future strategy.
Three years after the pandemic hit us, how do you see credit quality in general from here on?
So the way I look at credit quality, as you know, we are focused on MSME, SME sector for the past many years. The way I look at it is, how's our performance in collections and recoveries, and how's our performance in new sales origination, that is new loans booking. So let's just take that two things separately. The first quarter of last year, that is 2021-22, was one of the biggest challenge, because we had just come out of the COVID pandemic wave 2. The delinquency and NPAs increased substantially, in spite of the fact that there were opportunities that were given by Reserve Bank of India and government in terms of ECLGS, restructuring and so on. See, when the shop itself is closed, it's not easy to recover any money from that customer. But very happy to say that from August, September of last year, step by step, customers' ability to repay has grown substantially. Even though NPAs slippages are increasing, we are able to almost equal by upgrades and recoveries. In fact, upgrades are higher than recoveries, which shows that the health is coming back. That is number one. Number two is the credit demand itself from the MSME, SME sector. Raghu is really quite good, because when we are talking about the targets to our salespeople, I hardly find any resistance in terms of, no, this can't be done. No, I think this is too high. They're saying, yes, I think there is an opportunity. Let's do that. And I think market numbers also seems to indicate. Last point I want to make is, this is a favorite example everybody will be giving. I'm also giving. I was recently there for a customer meeting in Bangalore, and then customer meeting in Pune. The amount of time it is taking to move from one place to the other, the hustle and bustle that you see on the road and in the markets just tells you that things are definitely back to either pre-COVID levels or better. So that is a good indication of the credit environment changing.
You're very particular that you'll focus on secure lending. Now, given that several small businesses may not have adequate collateral at times, is there scope for innovation out here?
There is definitely scope for innovation. See, we are clear that our strength is giving business loan, home loan, working capital loan, and it has to be backed by security. One of the reasons why our upgrades and recoveries are so strong is because we have always insisted on self-occupied home or self-occupied business or both as a collateral. Usually an SME will not give up these collateral and therefore the preference for them to repay our loan will be at a higher priority than an unsecured loan. So there are other companies that are providing unsecured loans. Even fintechs are providing unsecured loan. Wherever possible, we have tied up with some of these fintechs to see what kind of products we can explore. But our core philosophy is to give secured loans to customers because that is what we believe will keep our portfolio in good this thing. Yes, I agree. Some of the customers don't have collateral. That doesn't fit into our target market.
Now, can you give me a sense of the mix of your retail to your corporate portfolio and which is growing faster?
Corporate has been flat at about 10-11% for the past many years. We are not interested in growing our corporate book. We want to be granular in our loan book. 85% of our loan book is 3 crores or below. It is one of the most granular book that probably exists in the size that we are talking about. I don't think many banks can boast about that kind of granularity. And that's also one of the reasons the quality of the portfolio remained intact despite severe stress from COVID.
And why do you want such a granular book in the first place?
See, for a bank of our size, we have a slight disadvantage in cost of fund as compared to larger banks. If you want to compete in corporate lending, then your cost of fund has to be at least 75-100 basis points lower than what we have. That is a very important thing. Secondly, the market for SME, MSME is very large. 63 million is the estimate of SME, MSME target market. So for a bank of our size, when there is so much good business to do, why do we need to have any interest in corporate lending? And third is recovery in case a loan goes bad in corporate is very difficult because you have to coordinate with so many banks to arrive at a solution. Whereas when it is SME, MSME, usually we are the only bank or maybe there are 2 banks. It's and the collateral is with us. So therefore, it is not so difficult to resolve the NPA.
Will lack of size become a handicap for you at some point in time? Even if this question appears academic to you?
We are at about 46,000 odd crores of balance sheet. We lost about 12-15 months during COVID, where we grew only 7% on a CAGR. Between 2010 to 2020, we grew at a CAGR of 22%. Right now that COVID is over and we are putting the growth back on plan, I think we are likely to double our balance sheet between 3 to 4 years. And in about 5, maybe 5.5 years, we are looking to become 100,000 crore kind of balance sheet. So I think there is a place for banks like us who are focusing on SME, MSME. I don't see too many disadvantages about that at the moment.
Now, Murali, lastly, you will be completing 15 years in the corner office at DCB Bank in FY24.
Yes.
When can we expect succession planning to begin?
As part of the governance process, Raghu, we have to always have a succession plan. And these succession plans are reviewed by the board, nomination committee, and also looked at by the regulator. Okay. So I can say that succession plan is not something that I have to do now. It is something that has to be looked at by all responsible management and board on a continuous basis. And that is what we have been doing. Now, the new CEO has to be in place by April 2024. I think the regulator may need a few months to process the shortlisted candidates. So I think the NRC is pretty much on top of this along with the management team, and we should be able to do the job very properly by October or so of next year.
Murali Natarajan, it was a pleasure speaking to you, and thanks for being on the BS Banking Show.
Thank you so much, Raghu. Thank you, everyone. Thanks.
Yeah.
Natarajan says that even though NPA slippages are increasing, upgrades and recoveries are higher, which means health is returning. Credit demand from the MSME sector has been spectacular. Credit offtake has become easier because banks have endeavored to simplify the loan process. They need to make a similar effort to promote digital rupee. One way is to make wallets more user-friendly. But before we get to that, how does one operate a digital rupee wallet? Our experts explain.
Earlier this month, the Reserve Bank of India announced a pilot for testing the central bank digital currency or digital rupee for the retail segment. This pilot would be for a closed user group comprising merchants and customers. Initially, the retail pilot is being conducted in 4 cities: Mumbai, New Delhi, Bengaluru and Bhubaneswar, and will subsequently be extended to cities like Ahmedabad, Gangtok, Guwahati, Hyderabad, Indore, Kochi, Lucknow, Patna and Shimla. The RBI has identified 8 banks for phase-wise participation in the retail CBDC pilot. The first phase commenced with 4 lenders: State Bank of India, ICICI Bank, Yes Bank and IDFC First Bank. And Bank of Baroda, Union Bank of India, HDFC Bank and Kotak Mahindra Bank will join the pilot after 2 to 3 weeks. Transactions using a digital rupee can be both in the form of person-to-person transactions and person-to-merchant transactions. During the pilot phase, access to the digital currency app will be given to select retail customers of selected banks, who will be a part of the closed user group. The digital rupee wallet will be a physical wallet, but in digital form that will be available for download on smartphones with an Android OS. Customers can use the digital rupee wallet to make payments to merchants and individuals who are part of the pilot. Payments to merchants can be made through a unique QR code displayed at respective merchant touchpoints. As per the requirement, banks that are part of the pilot process will place requests with the RBI for digital currency. Based on the indent received from banks, RBI has created 1.71 crore rupees of digital currency of various denominations except 2000 rupees denomination. To participate in this digital payment journey and activate their wallet, the select few customers will have to download the Yes Bank Digital Rupee wallet using the web link that will be provided by the bank. Once customers download the app, they will be able to place the request for digital rupee through the digital wallet, and the requested amount will then be credited to their digital rupee wallets by the bank. The use of digital rupee is expected to reduce the operational costs related to the management of physical currency, while also furthering financial inclusion in the Indian economy. And the digital nature of the rupee will make currency transactions easier, safer, faster and cheaper as per RBI. In the future, the RBI will also work towards achieving interoperability of the digital rupee with other payment systems. As per a Business Standard report, the transfer from a bank to a customer's digital rupee wallet is recorded on the core banking system. Transactions made from one wallet to another are not recorded on the system, making it anonymous.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high.
nation's trusted bank, SBI, the banker to every Indian.
Besides the digital rupee pilot, the rate hike was another significant decision by the Reserve Bank of India over the week. I had a chat with our consulting editor Tamal Bandyopadhyay right after the RBI's rate decision and the decision at the MPC meet. Hi Tamal, thanks for coming on the show.
Thank you.
Now, congratulations are in order first. This is the third time you're getting it right, or the fourth time. Right, you predicted a 35 basis point and it's a 35 basis point that we see. Do you foresee other changes coming? And what do you foresee in the next meeting? That's the important question.
Thanks. First is, yes, I got it right, but no, not everything fully. I got the 35 pips hike right. I got the inflation unchanged also right, but I got the growth projection wrong. I mean, Reserve Bank of India has actually pared its growth projection for the year from 7 to 6.8%, so which was not on my radar. Governor also has explained that this is risk evenly balanced. So it is 6.8%, but doesn't necessarily mean that it will be restricted to 6.8%. It could spill over to 6.9 or even 7. But I think it's a very conservative estimate. The other question you asked is this: what to expect? Now, I will ask you to look at the 3 very critical paragraphs of this particular statement. I'm looking at para 7. It says, on balance, the MPC was of the view that further calibrated monetary policy action is warranted to keep inflation expectation anchored, break core inflation persistence, and contain second round effects. MPC was of the view. I have seen all the experts are talking about as if this is talking about future, that the MPC is in favor of calibrated monetary policy action. This is exactly the genesis of the rate hike, right? So MPC is not of the view, it was of the view before taking this current 35 bips call. Keep that in mind. Now, if that gives us encouragement that this is a end of the rate hike, this is not, then I'm drawing your attention to 2 other points. One is this statement, point number 15. It says, GDP growth in India remains resilient and inflation is expected to moderate, but the battle against inflation is not over. I repeat, battle against inflation is not over. And finally, para 30, the course of our future policy will duly consider new data releases and the evolving outlook of the economy as well as the effect of our past actions. I will not be surprised if there is yet another rate hike in February by 25 basis points.
Because we're talking about the positive real interest rates, a thing that comes to my mind is the transmission into deposit rates on the deposit side. Is there a need for faster transmission of rates from banks?
Yeah, but again, I'm going back to Reserve Bank of India's governor statement. I think our perception is not exactly correct. Indeed, we need faster transmission, but I'm also surprised to see that the transmission in deposits is faster than transmission in loan. Look at this, what he says that Governor said, May 22, the weighted average lending rate on fresh and outstanding rupee loans have increased by 117 bips and 63 bips respectively during the period between May to October. On the deposit side, the rates have gone up by 150 bips and 60 bips respectively. So while the new loan rates have gone up by 117 bips, new deposits have gone up actually by 150 bips. So it's not that banks are stingy and not moving. They are raising, and I would like to believe, yes, we have not seen the end of the deposit rate hike. We will see little more.
On to the last question. Now, I remember Raghuram Rajan at some point of time coming and answering that I'm not a dove, I'm not a hawk, I'm Raghuram Rajan. I do what I do. Is RBI dovish or hawkish right now?
You've come very, you have come very, very close to it. About the reference to Raghuram Rajan, and I'm going to refer to what Rajan had said. There have been discussions post policy announcement. There is dovish on hawkish. Certainly, if you look at this, market is of the opinion that he is slightly more hawkish than what he was expected. 35 bips rate hike is on the expected line. But there was expectation that you'd see that it's the sort of we are nearing the end of the rate hike cycle. Certainly is not a dove. Is he a hawk? Some of them can say. But I would say, again, I'm quoting Dr. Jalan and his deputy at that time, who later became RBI governor, Ujit Patel. He's an owl. He's an owl. I'm quoting that. In 2014 January, Reserve Bank of India then Governor Raghuram Rajan surprised the market with a hike in interest rate, and then asking questions of the reporters, he took to ornithology to explain the policy stance, saying that we are neither hawks nor doves, we are actually owls. He is keeping a very strict vigil. You and I can afford to sleep, but he's keeping a very close vigil. And he will get it right. I would think that he and his team, the MPC, if there is a requirement, be prepared in February for yet another 25 bps hike. And then you can say that, okay, he's no more howl, no more hawk. Probably he might sound marginally dovish at that point of time.
Got your point.
Yeah.
Thank you. Thanks a lot for your time. It was great talking to you. We hope to see you talk to you again next week. Thank you. Language and forecasts around the meeting have become as important as the rate decision. As the US economy data shows a stronger job market, concerns are that the Federal Reserve will not take its foot off the pedal anytime soon. We asked you a question last time about the RBI rate decision. Most of you have been more dovish than the RBI. 56% of the people in our poll said that rates would rise by less than 35 basis points, and the central bank has done otherwise. This week, we want to know if the government should allow foreign investors to own a higher stake in Indian banks. Our polls open on Friday, and you can respond on Twitter, Instagram, LinkedIn, Telegram, and our website. The decision on Yes Bank and the inclination to attract foreign investors for IDBI Bank means the government's stance is softening towards foreign investment. We'll be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.